Hello everyone and welcome to another Closed-End Fund Mastery video. For those of you not familiar with Closed-End Fund Mastery ranks and scores 326 of the highest yielding closed-end funds trading today. The goal of CEF Mastery is to locate funds that have the highest probability of distribution sustainability, second, long-term appreciation potential, and third, to be well positioned for future distribution increases and special dividends. Closed-End Fund Mastery has been out for just over 2 years now. It is the byproduct of the crash from March 2020 and has since been through the aftermath of one crash and now a prolonged market downturn. In today's video, we're going to review Closed-End Fund Mastery's performance in reference to all closed-end funds whose reporting period was from the months of October 31st, 2021 and April 30th, 2022. Now, I know we're here in July of 2022, but for those of you that follow my work, you're aware that closed-end funds don't usually file their annual or semi-annual returns with the Securities and Exchange Commission until at least a couple months after the period has ended. In this video, we're going to look at the distribution record for all Closed-End Fund Mastery funds, the relationship between score, performance score, and final score, the accuracy of Closed-End Fund Mastery's scoring system, the accuracy of Closed-End Fund Mastery's estimated monthly distribution record, and in light of today's market environment, are distribution cuts imminent? We are now going to go over the distribution activity for the period of October 31st, 2021 to April 30th, 2022. Of the 326 closed-end funds covered by Closed-End Fund Mastery, during that time period there had been a total of 140 distribution cuts, equivalent to 65 cents. CEF Mastery cuts came in at a total of 17, totaling 13 cents, a mere 12.14% of the total 140 distribution cuts for the period. Digging deeper into CEF Mastery's distribution cuts, we see the ticker symbols of the primary culprits for the bulk of CEF Mastery's distribution cuts. My CEF Mastery subscribers to my service, not to my YouTube channel, should be well familiar with these ticker symbols. These funds are known as managed distribution funds. And in the case of these particular funds, they all have a managed distribution policy of a rolling percentage of net asset value. And basically what that means is as the fund's NAV goes up, the distribution goes up. And when the NAV goes down, the distribution goes down. These particular funds haven't seen too many up days over the last several months, and as a result, their distribution cuts have been consistent. Now, my service subscribers know, and I reiterate it every time one of these particular funds has a distribution cut, and I'll probably keep reminding them when the distributions start to increase as well, that you can often see what's going to happen with the distribution based on where the net asset value is in relation to the previous quarter. In other words, if the net asset value is higher, it'll probably be an increase. If the net asset value is lower, it'll probably be a decrease. I wrote about this particular aspect of managed distribution funds in my weekly distribution letter a couple months ago, the topic titled, "Can You Predict the Future?" And basically all I did was an overlay of the fund's net asset value per quarter in relation to its distribution. And in every case, you can see that the distribution follows the trend of the fund's net asset value. Now, in this particular quarter, the distribution bucked the trend in December of 2021. And this was more than likely the result of the fund having to distribute the remaining accumulated earnings in order to satisfy IRS guidelines. But as you can see in the following 2 quarters afterwards, the distribution continued to follow the trend of the fund's net asset value. Ironically, it is this particular trait of a fund that often, as these funds wind up as a qualifying closed-end fund mastery fund. and for good reason. Currently, there are 93 managed distribution closed-end funds monitored by Closed-End Fund Mastery, as opposed to the majority of the funds which are income-only funds of 233. If you look in the chart to the right, for the 3-year NAV average return, the 5-year NAV average return, and the 5-year NAV price change, in every case, managed distribution funds have outperformed income-only funds. And because I have to toot my own horn, you have the managed distribution funds on the left, the income-only distribution funds on the right. And you can see in every single instance, Closed-End Fund Mastery outperforms. Anyway, a cut is a cut, and CEF Mastery will eat the cut. But just so you know, when these funds start to raise their distributions again, CEF Mastery won't take credit by adding those distributions back to the cut column. Once a distribution's cut, it stays cut for distribution reporting purposes. However, knowing the nature of these funds, and the cuts were pretty much predicted, if we were to take out those 13 cents in cuts from just those ticker symbols, then Closed-End Fund Mastery would have only experienced distribution cuts in the equivalent of 0.0041 cents. And that 0.0041 cents would have been from 7 funds, or 5% of the 140 total cuts. And that 0.0041 cents would have been only 0.63% of the percentage of total cuts of 0.6542 cents. Now for the total distribution cuts since March of 2020. Without Closed-End Fund Mastery, funds experienced a $7.25 decrease in distributions. With Closed-End Fund Mastery, you would have realized only a total of 19.5 cents in distribution cuts, or only 2.69% of all cuts. Now, to put this into context, imagine you had all 326 closed-end funds in an indexed fund, and you owned 100 shares, and it paid a distribution of $100. We'll say quarterly just to keep it simple. Your 100 shares would have experienced a net cut in distributions of $724.70 per quarter. Then if you held a basket of Closed-End Fund Mastery funds, you would have realized a distribution cut of $19.50 per quarter. Now bear in mind, this figure does not include distribution increases or special distributions. Now during the editing of this video, I did take the time to update the numbers on my distribution summary page. I also took the time to extrapolate my distribution cut summary on an annual basis. Previously, I gave you a conservative example of if the lifetime to date distribution cuts recorded by Closed-End Fund Mastery were realized on a quarterly basis. Without Closed-End Fund Mastery, $724.70 per quarter, and with Closed-End Fund Mastery, $19.50 per quarter. However, I happen to know that the majority of the cuts without Closed-End Fund Mastery are on a monthly basis. So if we took the conservative scenario of $724.70 per quarter and multiplied that by 4 quarters, it would come out to $2,898.80 a year. However, because most of these cuts are monthly distributions, that number could be as high as $8,696.40 a year. Now, I do also happen to know for a fact that with Closed-End Fund Mastery, a large bulk of the 19.5-cent cuts came from the fund tickers that we discussed earlier, accounting for roughly 17 cents of the 19.5 cents. So if we extrapolated that number out on an annual basis and you added a little extra for the fractional distribution cuts from the other funds, you're looking at an annual distribution cut $100 to $400 a year compared to $28.98.80 and $86.96.40 per year. Before we move on to our scoring results, it's important that you understand the relationship between the Closed-End Fund Mastery score, the fund's performance score, and the fund's final score. Closed-end Fund Mastery takes several key data points from a fund's semi-annual and annual report filed with the Securities and Exchange Commission. Each one of those key data points is scored according to strength. Then the scores of those key data points are totaled to come up with a fund's score. And simply put, the higher the fund's score, the healthier the fund. Now, it is believed at this point there is no reason for a CEF Mastery qualifying fund to cut its distribution. Now, in order to maintain that degree of certainty, we also have to track the fund's performance since it last reported. And again, using several key data points about a fund's current performance, we then come up with a fund's performance score. However, the fund's performance score cannot be used as a qualifier for a closed-end Fund Mastery qualifying fund. The reason being, if we use the performance score as a qualifier, there would be a whole lot of funds that simply would not qualify regardless of a high performance score, which you can see here under the score column with all of the funds that have a high performance score but a low or non-qualifying closed-end Fund Mastery score. So in order to rectify this situation, we then created the fund's final score. The fund's final score is simply the fund's score, plus or minus the fund's performance score. Now, this next part is crucial. Do not mistakenly assume that the addition or subtraction of the fund's performance score to the final score changes the fund's score. For example, in the fund MCI, you have a score of 31 and a performance score of 18, giving the fund a final score of 49. The fund having a final score of 49 does not raise fund's score of 31 to 49. The fund's performance score and the fund's score does not have a one-to-one correlation. For example, the fund might have a performance score of 18, and when the fund files again, the fund might have a score of 32. The reason for this discrepancy is because both scores are completely two different animals. The fund's score is an indication of the fund's financial health. The fund's performance score is an indication of how well or how poorly it has performed since it last reported. The reason the two cannot be combined is because, regardless of the fund's performance, we have no idea how much financial judo is going on behind the scenes with the fund's factors that make up the fund's score. Okay, we've covered the 326 closed-end funds covered by Closed-End Fund Mastery for the reporting period of October 31st, 2021 to April 30th, 2022. Now we're going to focus our attention on the funds that actually have the reporting period of October 31st, 2021 to April 30th, 2022. There are currently 74 funds that have the reporting period, of which 18 funds had a CEF Mastery qualifying score and a CEF Mastery qualifying final score. However, of those 18, one fund, HIE, did not have the necessary estimated monthly distributions remaining to qualify, and the fund BCV was introduced later in the reporting period as a replacement to a closed-end fund that was delisted. A CEF Mastery qualifying fund is a fund that has a fund score that's in the green, a final score that's in the green, and an estimated monthly distributions remaining in the green. The only exception is when there is a material introduction of new shares, material being any number of shares that drastically offsets our estimations. A perfect example would be a rights offering, where a fund offers shareholders the opportunity to purchase more shares of the fund, usually at a discount. Another exception would be a shelf offering. A shelf offering differs from a rights offering in the fact that the fund has already made arrangements to introduce shares as they see fit. And in the case of the 5 funds you see listed here, these funds already have the capacity to issue unlimited shares. Now, before we go any further, I want you to know that I designed Closed-End Fund Mastery Super Screener and Interactive Report to be the most comprehensive, simple closed-end fund evaluation tool available. And for that reason, everything I'm showing you in this video, you do not need to know. However, in light of current market conditions, I think it would be extremely helpful for you to see how the process works. And also, in light of current market conditions, I want to show you that Closed-End Fund Mastery is working as intended. I'm going to do a walkthrough of a fund's scoring timeline for the fund EVT, which is the first fund listed, so that you'll better understand how the scoring system works. We're looking at the reporting period of October 31st, 2021 to April 30th, 2022. When these funds reported for the period of October 31st, 2021, we were well into December of 2021 when those reports came out. So from the end of the reporting period to the time that these funds actually file with the Securities and Exchange Commission, most of the data is already approximately 2 months old. So what essentially happens is near the end of December, when we get the report, we have to go back in time to the end of October 31st to determine a fund score. Now at this point, there are already 2 months that have gone by, and the fund has since changed since it last reported. This change is measured by the fund's current performance since it last reported, which gives you the fund's estimated monthly distributions remaining and the fund's final score. Now, as the period continues, and while we wait for the next reporting period, which ends on April 30th, 2022, we are now 2 months past the reporting period of April 30th and well into June, which gives us our ending estimated monthly distributions remaining and the ending final score. Now, once I actually get my hands on the actual report towards the end of June or beginning of July, we then go back in time to April 30th, 2022 to give it a new score. And then the cycle starts all over again. Now, before we go back in time and establish a new score for the period ending April 30th, 2022, I want to know how well Closed-End Fund Mastery has done its job up to that point. What you're looking at now are the Closed-End Fund Mastery results on the date of July 2nd, 2022, the Friday before I entered the April 30th, 2022 reporting information. Now keep in mind, a fund's score does not change for the whole period because that's based on information provided in the report filed with the Securities and Exchange Commission on October 31st. What does change through the course of time before the next reporting period, though, is the estimated monthly distributions remaining and the fund's final score based on the fund's performance score. The most glaring thing that stands out is that every fund that had a shelf offering had a positive performance score or non-negative performance score. What's also notable is that 4 out of the 5 funds that did have shelf offerings were Eaton Vance family funds. The 5th one was a Calamos family fund. Another thing that stands out is the fund ETG, which is also an Eaton Vance family fund, did not have a shelf offering and did not have a positive fund performance score. What also stands out is that the remaining funds that did not have shelf offerings had lost their closed-end fund mastery qualifying status by July 2nd. It would be interesting to know if these Eaton Vance funds and the Calamos fund would have still maintained its CEF Mastery qualifying status had it not been for these shelf offerings. And I'm not necessarily saying that the use of shelf offerings is a bad thing. My personal belief is that a fund that has tools available to them to maintain their distribution is a good thing as long as it's not abused. Now we move past July 2nd to July 5th, which is after the weekend I entered the April 30th, 2022 reports. Now remember what I said, that there is not a one-to-one point correlation between a fund's final score and the fund's score. Here you can see that the net asset value percentage declines had a drastic effect on a fund's score. Here you can see that the Eaton Vance funds and the Calamos fund ended the period extremely well, but because of their NAV percentage declines, and the before mentioned shelf offerings, it had a significant impact on the fund's score. Now, for the remaining funds, you would have known going into the new reporting period that these funds would have lost their closed-end fund mastery status. So in the new reporting period, it would be no surprise that these are no longer closed-end fund mastery qualifying funds. What's extremely interesting is the near accuracy in which closed-end fund mastery has forecasted out the estimated monthly distributions remaining. In the left-hand column, you see the estimated number of monthly distributions remaining up till July 2nd, 2022. And then you see the estimated monthly distributions remaining after I inputted the April 30th report. And to the column next to that, you can see the difference in the actual number of distributions remaining. Now, in closed-end fund mastery super screener, I usually round the estimated number of distributions remaining up or down. But here I'm showing you the fractional difference. And the reason I'm pointing this out is because if you ever see a closed-end fund that has the qualifying number of estimated monthly distributions remaining, which is currently 6, and it's not highlighted in green, it's because more than likely the estimated number of distributions remaining is probably in the range of 5.5 to 5.9 rounded up. But because it's below the actual number of 6, it would not qualify. Now, looking once again at the difference column, you can see that the Eaton Vance funds that we discussed with the shelf offerings, closed-end fund mastery actually estimated a slight difference more than the actual dividends remaining because of the shelf offerings. These funds were paying distributions on additional shares that closed-end fund mastery would not have been aware of. And for most of the funds below it that have a negative difference, this would have been because of dividend reinvestment plans, people automatically reinvesting their distributions into additional shares. But again, the accuracy is remarkable. Now, finally, if you invested in a closed-end fund mastery qualifying fund and you did not exit that position when it lost its closed-end fund qualifying status, the important question you want to know the answer to is a distribution cut imminent? Unfortunately, I can't answer that for you because even closed-end fund mastery qualifying funds are not immune to distribution cuts. However, if you still hold the fund and you want to know if the fund is likely to cut its distribution, there are a few things to consider. First and foremost, which is the one thing we put a lot of emphasis on, is how many estimated monthly distributions remaining the fund has. And as you can see, other than the Eaton Vance funds at the top and even the Calamos fund, the situation doesn't look pretty. But if you look at the net investment income to distribution and the net investment income and realized gain to distribution columns, you can see that quite a few funds actually managed to make their distributions with just those two category types of income, meaning that most of the losses endured by most of these funds were from primarily unrealized losses. And also here, in most cases, you can see the portfolio turnover ratio is really not that excessive or low in many cases, which is a good indication that the fund didn't have to liquidate most of its portfolio just to make its distributions. Although you can see that IAF did cut its distribution in February, which closed-end fund mastery missed, but not because of a performance issue, but because, as we mentioned before, this is a managed distribution fund, and no matter how well managed the fund is, it has a policy that if the fund's NAV goes up, the distribution goes up. If the fund's NAV goes down, the distribution goes down. So there's not really much you can do about that. And the fund BFK did cut its distribution in June of 2022, which closed-end fund mastery would have had you out of if you were to base your decision on when the fund lost its closed-end fund mastery qualifying status. Okay, everyone, I'm going to wrap this video up. If I left any questions open-ended or I did not address any of your concerns, feel free to leave a comment in the comments section below or send me an email at TheDividendTimes@outlook.com. If you gained anything from this video, please give it a thumbs up. Believe me, it does make a difference. I had a video watched today that got 1 thumbs up, and I wound up getting several more views. I'm still young on YouTube, so I don't have much of a presence, so any little bit helps. Also, subscribe to the channel if you'd like to see more of these videos. And if you have interest in my subscription service, here's all the details. Thanks again for watching.